Welcome to Resiliency and Ag, Playing the Lone Game webinar. Today, myself, Tommy Peterson, the Great Plains Technical Assistant for the IEC, and also we have Stephen Bond, who's the Southern Plains Technical Assistant. We'll be having a discussion with Skaya, so I'm going to give Skye a little bit of time to introduce herself and kind of just what she does.
Hi guys, like Tommy said, my name is Skye Dushnell and I operate Occupton. A little bit about how we got here. At the end of 2017, I was hired under the Intertribal Ag Council to create this loan fund. And then so we spent about a year developing it. And then we officially opened up for business and separated from IAC in January of 2019. So we've got about a year and a half of operating under our belts, and it's been great. So.
Awesome. So we're just going to take some time to ask Guy a bunch of questions and have some discussions about, the loan game, about lending institutions. So the first question I kind of want to ask though is, what is the difference between, or what is a CDFI exactly?
Yeah, so a CDFI is a community development financial institution. They are nonprofit lenders, and they are really community economic growth oriented. So,
gotcha. So what do you think the main difference between a CDFI and the other lending institutions are?
So CDFIs are actually nonprofits. We aren't a bank with like shareholders that we have to keep happy, or we don't have to make a profit. There's all those other rules and regulations that banks have that we don't have. We're unregulated. There's still laws we have to follow, but there's certain regulations and things that are different for us. And like I said before, we're just really, we're not here to make any money. We're here to help the community. We're here to get the economic growth better in communities. They're kind of like becoming super popular in Indian country because CDFIs pair their loan products with technical assistance. So they help with like the business planning, the financials, and we can help with like the whole process. We don't just take an application and say yes or no. We really help you build up like the perfect plan. And so that's been kind of why they've started to get like hugely popular in Indian country, is just because of that technical assistance component that is paired with our loan products.
Yep, and that makes a good point too, because there is specific CDFIs that are for Native Americans. Mm-hmm. And then there's specific CDFIs that are for agriculture. So like you're an agriculture native specific CDFI. So you have a specific, customer base that you reach out to.
Yep. Yeah, we're unique,
right?
Yeah. So we're a little bit unique in that we serve only natives, and only natives that are looking for agriculture funds. A lot of CDFIs, especially in Indian country, have like credit builder loans, consumer loans, mortgages. Mortgages is a huge one for a lot of my colleagues and stuff. But we notice there's a huge gap for financing with natives in agriculture. So we hit that little niche market specifically to help bridge that gap, because there's a bunch of other native CDFIs helping with the other areas. So this is the one that we decided to tackle.
Awesome. So then now talking about, financing agriculture, how is that different from financing other types of businesses?
Oh, it's it's crazy. Each one is so unique, and there's so many different variables and things that are outside of the producer's controls. There's weather, market losses, like things that you just have to take and you don't have a choice about. It doesn't matter how hard you work. And then with like a lot of other businesses, they operate like on a monthly production cycle. Agriculture operates on an annual production cycle. So one bad year is going to affect the whole next year moving forward, not just a whole month. And and different things like that. And just every operation is different. People do things different ways. And so we kind of have to learn how they do it and like how we can help them do it their way, because we don't want to make everyone do it, like one single way. But yeah, there's just so many different variables in agriculture compared to just about anything else that it makes it especially challenging, but also exciting, because I feel like we're always learning along with that too. So
Yeah, and on that point, like giving a loan for, cattle is much different than getting a pickup loan, right? I mean, you take different numbers, put those things together. Cash flows are different, and it just takes a little bit of unique information to finance agriculture, right?
Yeah, because I mean, if you go to anywhere and go to get a loan for a pickup, they just ask you about like your monthly income and like what your expenses are, like your other notes, and then like that's a lot of it right there. And then here with us, like we need to get kind of down into the weeds and figure out um all the different details, and like how, like if there's one bad market year, are you going to be able to continue on, or, you know what I mean, just like different things like that. It's not just like, hey, here's a couple of quick questions and then we're good. We kind of really need to get into the weeds, and we really spend a lot of time with our producers, like getting to know them and really building a relationship with them, so that we can help them as best as we can. We don't necessarily look at our borrowers as borrowers. We look at them as like partners, because their success is our success and we're here to help them. So just like building that relationship and really getting to know them and their operation is like really important to us.
Awesome. So then kind of my next step is, if a producer is looking to get an egg loan, what is the first steps that you would direct them?
A lot of times we have people come in and they're just like, hey, I want to get cows, or hey, I want to start this egg business or something, but they don't know like the who, what, how, where, when, like those kinds of questions, and like more of like that planning side. And we're more than happy to help them, but that's going to be the first thing that we ask too. And so like you can't just say like, hey, I want to come and buy some cows, and then not know anything else that you want to do. So that's kind of a really important step, is just to get like a general idea of what you're going to do and how you're going to do it. And then like your goals, like, do you want to just get a few cows and then maintain it there? Do you want to get really big? Do you want to start farming on just a couple acres and then get really big? Like, do you have these bigger goals? Because if you do, we've got some planning tools that can help you get to that point. So don't just be like, hey, I want to get cows. Hey, I want to be a farmer. Hey, I want to start this business. It's really, really important to have a little bit more thought into it, and think about, like not just the next couple of years, but like the next 10 years, like where do you want to be, what do you want to do, because that's one thing that we ask, is just like what are your goals, how can we help you get there, and so it's good to think about that stuff, like not just the immediate future, but like years past too.
Yeah. And one of the things I notice when I help people, the first thing I talk with them, and they know what they want to do and how they want to get there, but they rarely write those things down. So I always tell them, have a written business plan. And that will be a really good first step to get you in a direction, especially when it comes to getting loans. Because you're going to have to know numbers and they're going to want things written down. So it takes a little learning, especially for young producers, but you need to learn to write things down. Have a real formal business plan. I know we're not a shoe company, but even though you're running cows, it's still good to have a written business plan. Is that kind of what you see too, Stephen?
Absolutely. If you can get it into like a mission statement within your farm plan, that really helps kind of keep folks on task, and it helps articulate what you're trying to do to the loan agent, whether it's a CDFI or a regular bank, and kind of gives them some insight, and that you've thought broader about this, and that you've got a kind of a core value built into that mission statement. So that can help a lot. Sometimes
it really
helps ourselves years down the
yeah.
road when we're like, oh, that's right, I really want this.
And it
Yeah.
doesn't need to be anything super formal. It doesn't need to be like a 30-page plan either. You know what I mean? Like something more simple and informal, but that has like the meat and potatoes is like what we think is great. So.
Yep. So that kind of leads to the next discussion. Like, what are the typical barriers that you find that your customers face when trying to get financing?
It's kind of a lot of the same thing. It's just they don't they just I always refer to cows because that's a large part of our portfolio, but they're like, my dad ranched, I want to ranch, I want cows, and then that's it. Like there's not much thought beyond that, or if they want to do things different or anything like that. So and how to get there, and like the budgeting and the financial planning side of that, like that's a huge barrier, just because there's such a gap of knowledge or teaching for financial literacy and financial planning in Indian country. It's just not something that we're taught that often. It's not something that's like easily available to us. So there's a huge gap in that part, and that's a big barrier. And just along with that literacy piece, like the terms and knowing what things are, and we find a lot people don't like to admit that they don't know things. So when we go over like loan closing documents, and when we go over ratios and different things, like we really make sure to explain them so that they're not getting left behind, or that they're not agreeing to something that actually isn't right or anything. So we really take the time to explain all these different aspects and what these terms mean and what the definition is and how it's going to affect them, and just different things like that, because it's just not something that we're taught very much at all. So that's kind of like one of our biggest barriers, is just like that financial planning, and just kind of getting to that point and getting them to write it down and to actually think about it, and not just do it and hope you make it by the end of the year. And just the literacy side of it.
Gotcha. And then, on top of that, besides, maybe lacking in the business and financial education for these kinds of things, a lot of times in Indian country, we have a lack of credit available. We're in credit desert areas. So they need to kind of learn how to reach out to other options like CDFIs, like, farm service agencies, loan programs. And then also, like if it's a beginning person, it's hard to just go up to a bank. Even if you do have a plan, I mean, sometimes it's very difficult to just go in a bank and get a loan.
Mm-hmm. Yeah.
Is that what you
see?
And there's a Harry Potter movie that, the magical creatures and how to catch them or something. I don't know, but there's a scene where the guy goes in to get a loan to start a donut shop, a pastry shop, and that's how, like, I think most people kind of view like the loan interaction is like the loan officer says, well, what's going to be your collateral? And the guy like opens the briefcase and it's full of pastries, and he's like, oh, my pastries will be my collateral. And that's kind of like farming is. Like, we know how to make something, we know how to create value and to put the sweat equity in it, but like knowing how that how to interact in that bank setting could be greatly bolstered by working with the CDFI and as a bridge institution, and so like, whereas Sky goes through and like walks the folks through that process and gives us kind of like an opportunity to learn how to get a loan. Beyond, getting that financial hand up and so we can start creating the records. I mean, most folks have never heard of a Schedule F, and they've been doing agriculture for 20 years or their entire life, and so that's really what I see is that, they've been kind of scrapping it together. They know how to do it. They know how to do it well. They know how to do it cheap. And so if they can get a loan, they can really skyrocket up and become more sustainable.
Yep. Yeah, absolutely. And that's kind of like a really big goal of CDFIs is like we were created because there's a huge population that doesn't have access to credit or access to fair credit. And that's why we were created. So when people come to our programs and they get to learn everything and they've got successful repayment and then they graduate on to a traditional lender, like that's kind of the end goal, is to get them ready, because CDFIs, since we are nonprofits and we're not regulated, our loan capital, we have to fundraise for everything. And so we don't have unlimited amounts of money or anything like that. So it's really limited. So, I mean, the goal is ultimately to get people to traditional financing where they can do bigger, better things. And so like you said, like that's kind of just the goal, is for us to help them, baby steps, and then send them on their way to do bigger and better things.
Yep. And on that same note then, so what traits do you see in your current customers, Gaia, that show a successful egg business?
I would just say it's like the willingness to put in the work and the willingness to learn and want to succeed in whether that means doing something different than your dad or doing something different than a different egg business or anything like that. It's just, you know, the willingness and the heart and stuff. You can kind of really see it in certain clients that have an idea for a business, and their eyes really light up, and you can see that they're going to do what they need to do. They're going to learn what they need to learn, and it's kind of really exciting to get to be a part of that process as well.
Awesome. Yeah, agriculture is kind of like a lifestyle. And a lot of people want the lifestyle. Sometimes if it's not paying, you do need to maybe make a change and willing to see how this can be profitable so we can keep the lifestyle.
Yep. Yeah. And
we want to be cowboys, but sometimes we don't want to do the weird work.
Yeah. And just that openness. We've got some financial statements and planning tools and stuff that we use, and there's like ratios and then different ways to break things down to figure out your bottom dollar that you might have not really kind of thought about before. And so just like being able to like see like, hey, like these guys do things a little bit different, but that's okay. I might be able to learn something from them, or you know what I mean? It's like that's just a huge part of it. And then just to put in the work and put in the time and not just send me an application and expect it to be approved, you know, to really work with me, because putting in the work for that relationship, like that's huge with us at Occupton. We do like quarterly check-ins with all our clients to make sure everything's good and that they're on track, or if we can help them with anything. That relationship's really, really important, because with anything in agriculture, you're going to have a bad year, you're going to have a bad month, there's going to be a bad storm, or just something's going to happen. And when we have that relationship with our borrowers, we're like, okay, this happened, like here's like, how can we help you, what can we do? Because we've got this great solid working relationship, we're really able to think of unique solutions to any kind of problem or anything like that, or to be able to help them. So it's just kind of putting in the work, honestly.
Yeah. What do you see, Stephen, as successful traits in farmers and ranchers?
Well, definitely that, folks that have the passion, sorry, having terrible allergies if you're in Oklahoma. But also folks that know what they're getting into, that know that how hard it is. I work with a lot of specialty crop folks, and that's a long game. Your first couple of years are going to be rough with weeds and insects until you get the protocols down. There's not a lot of second generation vegetable farmers anymore. And so folks that want to get into that often have to have a second job. So they're doing, that's, all agriculture. You got to have a second job too, right? And, to fund our habits, our farming habit. But yeah, folks that know what they're getting into, that realize that, that a greenhouse is like a dairy cow. You're going to be there every day, And so that's what I try to, not discourage folks, but really articulate how that's going to be. And it's really nice in the spring and before the weeds pop and all the soil's tilled and you're getting your vegetable crops in, but it's not until the heat of the summer or the dead of the winter when you're repairing your greenhouse or whatever that separates the folks that are going to be successful from the folks that may, suffer some financial hardship from taking on this endeavor.
Yeah. And on that same note, then, it's really good to find a banker or your lending institution that understands that. So if you build that relationship and you're able to articulate the details of your specialty crops, that it does take longer, that you're able to build that relationship and they're able to understand that it's different, when you're going into something like a specialty crop.
Well, in Occupton being tied to IEC, we've got, if somebody gets in a pinch, we've got a broad spectrum of background and knowledge. And so Sky knows she can call me up anytime we have somebody that's got a pest problem, even like, hey, what's this bug? As simple as that. And that's not, that is not happening at most banks. It's down to business and just the numbers. And so
I'll have to say, like, my favorite part is like when I just get pictures out of the blue of someone's plants or someone's cows or something, and they're like, "Hey, look at what we did," and I'm like, "Yes, I love it. Like, I love that." And it's not too often that like someone would just text their banker a picture of a vegetable or something, but I get those. Like,
So back to the number side of things, though, Sky, do you have any tips about agriculture bookkeeping or financial record keeping you would give?
Yeah, so especially with farming and ranching, since we operate on annual production cycles, nobody ever looks at their books except for once a year. It seems like right before tax season when you need to see if you need any more write-offs or something. That's just kind of how it seems to be. And that's because then it's the end of the year and you're like, oh my gosh, I spent way too much money, or you know what I mean? You're just way starting to get backwards on things. So like my biggest thing is to look at them monthly or quarterly at the bare minimum, but monthly would be great, and that way you know where you're at with your budget, you know how much operating capital you've been spending, you know how much you have left, if you're ahead of budget, behind budget. That's such a huge thing, and I'm working on trying to get an in-house bookkeeper for my clients just to help show them, because a lot of people don't do that, so you don't know what you're missing. You've been doing it one way your whole life and that's all you know, and you know there might be a different, better way to do it. And then if you're looking at things monthly, you're right on track of your operation, you keep up on it, and you're ready to go, and you can, you know, if you're behind budget, then you might be able to see like, oh, I can do this improvement or that improvement. And if you're overspending, then you know to reel it in before it gets to be too late and it's the end of the year and you don't have any money to pay some of your bills or something. So.
And then I always suggest, you know, to our young, you know, beginning farmers and ranchers coming up, they're tech savvy, and there are so many online bookkeeping services that are free. Universities have been making them, University of Minnesota, and they're all specific to cow-calf or specific to growing corn. So they have the same verbiage that you're using, so you're able to, you know, understand what you're putting in. So I always tell them, like, there's free services out there. I mean, find a system and just start using it.
Yep. Yeah, and maybe it's a good idea to have a good relationship with your accountant on that note too, and then you can do things, you know, monthly instead of annually right before tax season or something, you know, because that's that could get you into a bind without even realizing it. So
yeah. How about you, Steven? You got any tips?
Well, you know, seeing a broad range of folks in Oklahoma and southern and eastern Oklahoma region, Southern Plains and eastern Oklahoma region, we're fee simple, so people own their properties independent of the tribe, and so things are a little different here than we don't have leases, so I know that's really common with trust land, and so I tell folks there are things that you can do to add value to your property, and to assess that, and so you can increase your loan capacity, and you're putting money into your property, and you can write that down. Knowing your write-offs, and knowing how to manage your inventory, like when to buy things, so you don't find yourself in a bad way, not being able to order in some soil or to get, you know, access to professional services. You know, like y'all said, monthly is better, because like you should be doing an inventory assessment monthly, not annually. and
yeah.
and I don't know, you know, just going in it knowing you're going to make sacrifices, because those first few years are integral into building up a success. In the specialty crop, it's infrastructure, and so like this is a site that you're going to be operating on for some time, and so you know, knowing what works and what doesn't, so you can make those quick adjustments, because it's kind of like a race with the plants every year. Everything is so seasonal. You only get to do it so many times in your life, and it restarts every spring or every fall, depending on your schedule. And so that same concept could be applicable for cattle producers too. It's just like we only get a few goes of this, and so we only have a few only a few good production years to get it right. Yeah, well, that's about all I got.
So I have a big question for you, Skya. So where do you see egg financing going in the future?
I hope it starts following Occupton, honestly, and like our patient capital approach and our borrower relationship approach and just everything that we're doing. I think we're doing really good things over here, and on all of my conferences that I go to and fundraising trips and just different things like that, when I get to talk to all my colleagues on conference calls or just anything like that, it's starting to pick up more and more, and people are like, hey, we want to start doing agriculture loans. How are you doing that? What are you doing? Like, how do you do this part of the process or that part of the process? Like, I'm getting a lot of inquiries about how we do what we do, because people are starting to buy into our patient capital approach and how we do things, because we've had great success even within just the year and a half that we've been open and operating and stuff. So I just kind of hope that pace picks up and we get to spread the good word and fight the good fight some more with our style of doing things, because obviously the way that it's been done in the past really doesn't work that well all the time. History just shows that, and so we need to start doing something different, and that's what we do here at Occupton, is something different than what's been done in the past. So hopefully we can get some better results.
So I do want to give you a little bit of time to maybe explain your patient payment, how it's different than what other people are doing.
Yeah, so here at Occupton, when we go through the whole loan process and everything, we've got two different options, like payment repayment options. The first one is pretty traditional. It's just stretched out for longer. So for example, you could come in and buy some cows, and instead of terming it for just a few short years, we will actually term it out for like around 7, kind of seems to be standard. That way your payment is smaller and it leaves more money in your pocket for you to expand your operation and grow your operation. Instead of having to just sell everything to make your payment. And so we call that our traditional option. We've also got what we call our investment option, which is our most innovative option we have. And on the front end of that loan, we will do up to 5 years interest only payments. And that allows your payment to be so tiny that you can keep back all your heifer calves. You can take all your crop profits and use that to cultivate more land into usable soil. There's so many different things you can do, and like that option is really designed for upfront capacity growth. Like if you've got the room to grow, like that option is great for you because you've got small payments and you can do all this growing. And then you can do that for up to 5 years, and then your operation will be double, triple, whatever it is in that time frame. And then when it comes time to do the blended payments, like your principal repayment, it'll like those payments that would have been so big and daunting at the beginning of this journey are now kind of just chump change, because you've gotten to grow your operation. Like that expense isn't a big deal. And so that's kind of something that's really cool that we get to do, is just that interest only option. And it just really, we've gotten to see our clients do a lot of really cool things. And I just can't wait for the next few years to have even more of those kinds of success stories and stuff with our investment option.
Yeah.
It also helps alleviate some of the growing pains, or if your greenhouse blows over the first year kind of deals too. So
like just like the stress and just everything, it really just helps make things better. You've got the room to grow and room to do what you need, and that's just great.
Yeah, I think egg financing will be going more of a flexible in a way, thinking more about the producers and the variety that can be of options that be given to them to help them be successful in stressful years that hopefully aren't always like this year, but every year in agriculture is stressful. So
it's already a hugely subsidized industry, agriculture, and And so that kind of gets back into that title of our talk, the game. You know, if you know about these low interest options, but you know, now we've got a financial institution that can help you access some of the disaster payments and all the things that keep most producers going to subsidize that operation. Especially in this last few years, we've had all kinds of droughts and political issues and market ups and downs. So it's good to have allies with your
Yeah,
banker.
absolutely. Absolutely. We're always, whenever we hear about an opportunity for our producers, I'm sending out letters, making phone calls. Like we really try to go that extra step here at Occupton because like I said, like, we're not here to make money. I have to fundraise just to pay the bills. You know, like we're not here to make money. We're here to help the producers. We're not here to get a bunch of interest and stuff. So every opportunity I come across, I always make sure my producers know.
Yep. I would advise producers that you need to look at your options too. You know, there might be low interest rates out there right now for different places. I do see different farm credits coming up, Farm Business Network. There's newer things, insurance, different things coming up to look for your options that might be better because every dollar counts.
Mm-hmm. Yeah, absolutely. And that's one thing that we look at here too at Occupton is like, okay, like with what your operation is and what your goals are we the best lender? Could we save you money by going somewhere else? Or, you know what I mean? Like, we really don't just say like, nope, you're our customer, don't go anywhere else. Like, we're like, okay, like, are we the best fit? Is there a better fit? Like, what can we do to help? Or do we need to like split this? Like we've done collaborations with like us and another CDFI and a bank. And you know what I mean? Like we've done so many different collaborations just so that the producer is set up the best that they can be for success.
Awesome. Well, this is pretty good discussion. I think I'm going to see if there's any questions. And while those questions come up, I'm actually going to share my screen and show Skaya's Occupton's contact information so people can see how to contact you. They are located in Eagle Butte. That's their main office, but she does serve nationwide. See if there's any questions. Also, if you go to Intertribal Agriculture Council and the technical assistant page, you will find my contact information as well as Stephen Bond's contact information. And you can feel free to reach out to us if you have any questions about this webinar, about the things we discussed today, or anything that kind of pertains to ag financing. Or if you have any questions about agriculture in general, we should be able to lend an ear.
Oh, there is a question that popped up in the chat box.
Okay. Oh, they're asking about youth loans. So Sky, do you have a youth loan option?
Yeah, we do. We do provide loans to youth. It does take a parent co-signer or parent legal guardian. And then we've also had a lot of our youth get a loan from us and get a loan from the FSA because we both have $5,000 limits for youth. So that way they can kind of double it up and get off to a good start and stuff. And like I said, we work with the FSA, we work with banks, we work with other CDFIs to kind of create a plan. So that's something that's really common. And then along with that, the youth will also pair our loans with the IAC Youth Equity Grant as well. So then they get a little bit of extra money in their pocket and really get set up good. So.
Yeah, so I'll just make note that the Farm Service Agency does have a youth loan program, so you can look that up. And then also, there is CDFIs all over the country. A lot of CDFIs are region specific. They only, serve a certain area. But if you look up, there is a native CDFI website that shows what might be in your area, and there might be a youth loan option out there for you. But that's, for now, FSA is a great tool too. They are that $5,000 limit, and IAC does have a youth loan equity grant that we can pair with it.
the CDFI route for folks that I encounter all the time that have never really got a loan. They may have did a TV loan or something really small, and that may have even went awry, and now they're scrapping it together and trying to do trying to build up their credit, and so even if you don't think you're eligible for a loan, still reach out to the CDFIs. That's what they're there for, is to help walk you through, and then we can help get you into the next stage, whereas it may be an FSA loan, or maybe you can start banking with your local bank near your community or just off your reservation. But a lot of folks, they don't have any idea. Well, you got to start somewhere, and CDFIs are a great place to do that.
Yeah, and that's a good point, because bad credit or no credit doesn't necessarily bother CDFIs either. We're willing to really take that jump with clients and that risk. That's what a CDFI is designed for, all the CDFIs. So don't let that, like, bad credit or lack of credit necessarily turn you away before you even apply or anything, because it's not a huge relevant thing, specifically Occupan for us either. A lot of the times that we go and pull someone's credit report, and then good old IHS debt is on there or something too, and we totally understand that a lot of that stuff is out of control. And then since we are like a local lender and we understand Indian country, we know that like IHS debt is often not your fault. It's because you got told it got paid for and then it didn't, or something like that, versus like a traditional lender isn't going to understand like those intricate workings of Indian country and just how we do things or how we look at things. So your local CDFI is a great resource, because they understand you and help you can get that leg up to get to the next step.
I think that's all we have for questions. This was a great conversation, Skaya. This video will be available on our YouTube channel, so it will be recorded. And if you have any questions, feel free to reach out to all of us.
Yeah, I'm available all day, any day, it seems like, so feel free to reach out.
We're here to help.